Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the ASX 200. I'm also going to have a look at copper, gold and uranium, so make sure you stick around for that. I'm going to cover the S&P 500 in a separate video, and I'll put a link for that in the description section below. And also stay tuned for the middle section where I'm going to tell you about an exciting new development with this video I do each week. So make sure you're there and you're listening for that. As always, general commentary doesn't take your personal situation into account. With all of that said, let's get over to our first chart. So I've got the ASX 200 up on the screen, and it's been an interesting week for the local market. The big news was last week when we broke below this support at around 7,050, and for much of this week, the ASX 200 has just been rallying back, and it's just gotten to the underside of this level, 7,050. So over the last 5 months, this has been a really strong support level for the local market. The local market's been able to hold its ground quite well. But then, of course, we're broken below there now, so support becomes resistance, and the market is really not being able to get back above that level. I think that other things to note on this chart are these moving averages. So for the first time, we have the 50-day average crossing below the 100-day. So they've crossed, they've started to turn lower. We haven't seen that for some time. The last time the 50-day was below the 100 was back here. It was back last year. So it's the first time this year that we've really had this change in direction of the averages. And I think that this does bring a vulnerability into the market. So we've got the declining moving averages, and we have the price trading in a bounce which isn't particularly strong. So it's a pretty shallow bounce below declining moving averages. So when I see that sort of price action, it is something I'll take note of, and I'll look for vulnerability. Whatever happens in the US, I think, look, the US, of course, is going to be a key factor, but whether that support in the US I've been talking about in the other video, whether or not that holds, I think that we've got to respect the fact that the ASX 200 is in a vulnerable position below support, below declining moving averages. It is interesting though when I do look at an hourly. So let's just jump over to an hourly chart. I've just been watching this during the day. In fact, I've been watching it all week, in that we got this breakdown. We got this straight after we got the breakdown, we got the strong rally back up. But ever since then, there's been no follow-through selling. It's just been like a soft grind lower. And over the last 24 hours, we've had a little bit of a kick up, and we're just beneath that resistance again. So it is an interesting setup. It's a market which has broken the key level. We haven't got the follow-through, but as I say, we've got those declining moving averages, and it is so far a shallow bounce. So it's not clear where this is heading at the moment. Maybe this breakdown won't be sustained, but look, I'm not going to stand in the way of the price action at the moment. As I say, we need to respect there is a breakdown, and there are some points of weakness in the market. I definitely do not think that it's a sell everything moment by any stretch, but it is a case of just being cautious, respecting this price action, and let's see how this plays out. Want to have a look at the small ordinaries, and it's the same sort of vulnerabilities I was talking about with the ASX 200, in that we have the declining moving averages, we have a break of a support level, and we have a shallow bounce over the last week. I think that it is possible that this does still become a large basing structure, but we don't know. We can't work on the basis of that will happen. It could happen, but this could also be a continuation pattern where the market falls, it consolidates, and then it falls lower. That, whilst not my base scenario, it's not my base case, it's a possibility. So we've got to be prepared to be able to manage risk should something like that happen. I'm just being very careful with the stocks I'm holding. If they're trending lower, they're breaking their supports, they're hitting their trailing stops or their stop losses, I'm exiting. So I exited a couple of stocks which have done really well for me over the last 9 or so months this week. And there's no favourites. There's no favourites when we start getting this price action. Even though a stock might have done well for me, I'm not going to give it the benefit of the doubt in a declining market. It goes out like everything else when it hits the exit stops. I think that's the only way you can play this. And stocks which are below those declining moving averages, they're also the ones which I think are more prone to sharp declines. And we saw that recently with Chalice Resources just a few weeks ago. The stock had been trending below those averages for I think several months, and then it really gave way. So being very careful in those situations. Now let me tell you what I am thinking with this this service or what I'm doing with these videos. So next week I'm going to have a crack at going live. So Friday 1 o'clock, I'm going to do what I'm doing now, but I'm going to do it live. So it's pretty like it's 2:30 now, so it's not much of a difference in time for me. But you'll be able to tune in as I'm doing this rather than waiting till Saturday morning. And I think the big advantage of maybe tuning into the live is that you'll be able to ask some questions. So the format's going to be very much as it always has been. I'll start talking about the ASX and the maybe the small ordinaries. Then I'll move on and look at the commodities. But and I won't be doing the question Q&A during that. I just want to keep the flow. I want to keep the usual flow, which you're used to, and I think works well for a lot of people. But then after we get through the commodities, well, then I'm going to look at maybe a couple of motion trader stocks which have provided buy signals through the week. A couple of things which I think look interesting. Could be 2 or 3 stocks. See how it goes. It might vary from week to week depending on what goes on. And also maybe there's the opportunity for you to throw a stock code at me, and I might have a look at it and give a technical overview of those stocks. Of course, everything's general advice. There's no personal advice going on. I probably won't be able to do everyone's stock ideas. I want to keep it to 30 minutes. I want to keep it free flowing, but want to keep it succinct. I don't want one of these webinars or presentations that go on for an hour and a half, 2 hours. No one's got time to watch all that week in, week out. So keep it around that half an hour mark, but hopefully make it a little bit more engaging in that we do have that interaction. Because look, I do this because I like talking to people like I do through the emails, through my motion trader service, like I'm doing with this. But of course, it's really just a little bit one way, the way it's all set up at the moment. Look, another thing I want to be upfront with you there. I'm looking at putting a charge for the way I'm going to be doing this. And the reason for that is like it takes me most of Friday to put together the 2 videos that I do to prep for them, get my ideas, get my flow of thoughts so I can make them succinct and it's not just a rambling waffle for 20, 30 minutes. And then to upload them to YouTube, write descriptions and titles. There's also an hour on Saturday morning that goes into it as well. So there's a lot of work. And from YouTube, I get very little in terms of return on financial return on it. Now they show a few ads, but it's really just it's so little. It's like you could tens of dollars. It's not very much at all. So I think for this to be sustainable and to be really worthwhile for you and also for me, I guess I just need some return on that time. Otherwise, I've got to think, look, how else do I spend my time to make it productive for myself and my family as well? So we're not talking much. We're not talking thousands of dollars. We're talking about the price of a cup of coffee sort of thing each week. So it's a small amount. So you think of like coming to the dealing room briefing with me, talking about the markets, and you bring me a cup of coffee. That's sort of what we're talking about to make the whole thing work. So hopefully that'll be something which will be able to work for you, because I'd love to be able to deliver these to you each week. And of course, if you can't attend the live, don't worry, because it'll be uploaded at the usual time on Saturday morning for viewing at any time. But of course, all the a lot of the analysis on the commodities and the stocks, I'll take that out because that'll be for the people who are paying the paying to make the whole thing work. So with all that said, let's get back into our charts. And so we've got a few more to go through. So I want to go on to have a look at the commodities. And let's start with gold. And also, if you're getting some value, of course, please hit that like button. Please hit the subscribe button. Please leave that short comment. Tell me what you thought of all the stuff I just said to you then about next week. I'd really love to hear your thoughts and interested to hear what you think. Now, gold, interesting week in gold. It had been holding up really well despite the strengthening US dollar over the last couple of months. But look what's happened in the last week. Support's given way. Support at around 1,880. Support's cracked, and we're now trading below it. Moving averages are also starting to roll. Want to have a quick look at the weekly chart. Let's keep some perspective on what's going on. When I look at the weekly chart of gold, I think this overall structure is still positive. I think it's very positive. Big rallies, the consolidations, the corrections can go on for several years, and that's what we've had. We've had a big rally, and we've had a couple of years of consolidation. I think that consolidation is still playing through. I don't think that because we've broken a short-term support, any of that changes. Come back to the 100-day moving average. That's something that does happen during rallies. Markets come back to the moving averages. Whether that's going to be enough for this to stop, I really don't know. We've just got to wait and see. That medium-term picture, I think, looks good, but of course, we don't have the momentum when we look at the daily chart. And this does all kind of make a bit of sense because I've been talking about the gold stocks over the last couple of months. I've been saying the gold stocks have been a bit out of sync in that while gold is looking quite encouraging, the stocks themselves have, in a lot of cases, been weak and mixed at best. So just looking at the gold miners ETF, this is the US listed GDX, a VanEck Gold Miners ETF. There's a local listing of this as well, same ticker code GDX, but I'm using the US one. It's just got more data, more liquidity, so the chart looks better. This is interesting in that, look what it's broken down from. It's got this bearish flagging formation. So the market falls, it goes into a shallow consolidation. This is the sort of thing I don't want to see develop in the S&P 500 over the next couple of weeks. A shallow consolidation, because they tend to form these bearish flagging formations. Then the market can fall out the bottom of. Also look at the moving averages. So the GDX got back into the moving averages, the 50 to 100 day, and that provided resistance. The markets then bounced down from it. So the gold stocks don't look, they haven't looked great for a while, and they still don't. I think we're going to definitely retest this lower from March. We're pretty much already there. Once we got the breakdown, it was like a test of the March low was going to be in play, but we're kind of already there. There's nothing to do here, I think, other than just continue to, if you like gold, I know a lot of people do, be patient with it. We just got to wait. It's gold's day in the sun will come, but it's and it has been for anyone holding a physical gold ETF. There's been some really good gains there, and I think there's more gains to come. But in terms of gold stocks, it's the time isn't there yet. So I think we just got to wait for this to continue to play itself out. And I also wanted to have a look at the copper stocks. And the copper stocks are related to gold in that it's it's another one of the metals, and there is a broad correlation between them. And what we've seen in the copper miners, and this has been going on for months as well, we've had this large trading range which has persisted all year. And like gold, the copper stocks have broken out of a trading pattern as well. They now find themselves down at the bottom of the range. The moving averages are rolling over. It's not a time to buy copper either, I think. And this has been the case for quite a while, in that I've been saying, look, copper and gold, they've got great medium to longer term stories, but getting that immediate timing right hasn't been set up. Looking at, when you look at these copper stocks on a, just compressing that data, that big run up during 2020 and 2021 has now just led to this big consolidation, and that is one of those things that happen. I think it's a case of, as I say, be patient, resist the urge to buy these stocks too soon, because you can be stuck with stocks which are languishing in trading ranges or trending lower for a long time. It's like uranium, which we'll talk about soon. It took ages, and when it happened, it happened. I think the same can happen in this space as well, but give it some time. Have a quick look at silver. Yeah, no, you might remember I spoke about this a few weeks ago. It was back in mid-August when we started to get this low point in the range. It's been back and forth a little bit since then, right on the bottom of the range, trying to bounce a little bit over in Thursday's session in the US, but it does remain range bound. It does look interesting when you look at silver on its own, like gold, and gold's looking interesting when you look at, but when you look at the individual stocks, it's just not playing out. So I looked at a few big silver companies earlier on today. I was doing some research on them. One of the ones I had a look at was this one here, First Majestic Silver, listed in the US. It's a top 10 silver producer. And this is typical of a lot of the silver stocks which I looked at. In fact, most of them, in that they're all on downtrends. Like, look at these moving averages. Look at the share price. It's a funny thing when the stocks are out of sync with what potentially looks like it could be an interesting setup in the metal. So it's like, if it's not right, it's not right. And I've got no interest in buying a silver stock, despite what the silver price is doing, when it's in this sort of situation. So again, let's just wait and watch there. And I'll finish up with a look at uranium and uranium stocks. And look, this is just going from strength to strength. I've been saying for 3 weeks now. I started saying back in early to mid-September that this was getting stretched above the moving averages, and I thought some sort of pullback and consolidation was likely. And that's often what you get when you get breaks from trading ranges, but it has not been the case in this. This has absolutely ripped the whole way. And every week I think a consolidation's coming, we get more stretched above the moving averages. So I've been completely wrong from that perspective. The one thing I've got right in this regard, though, is that I've been holding my uranium positions, and I've resisted the urge to take profits along the way. I think this is a great lesson why I think resisting the urge to take a profit is so important, because moves like this, they don't happen every day, but they're also not uncommon either, in that trends can run further and last longer and be stronger than almost anyone expects. And I didn't expect to see uranium do that in the case of a month and a half. I thought this could take a few months. I thought it could happen, but I didn't think it was going to happen this quickly. So if you try to get too clever and say, oh, look, I'll take profit and I'll buy back on the pullback, you can quite often find yourself on the sideline as the best trade of the year, or maybe the best trade of 2 or 3 years, rolls off without you. Even though you had the view, you're not on it. So that's why I say, don't try and be too clever with these things. Ride the trend, stay with it, give it room to move, and the big money's made through sitting tight, not jumping in and out. So I think that's a big lesson to be reinforced through what we've seen with uranium. Just looking at the stocks, like I've spoken about Bannerman over the last 6 weeks or so. I was talking about the entry point when we had the breakout from this range. I'm in Bannerman. That's one of the stocks I'm holding. I'm still in that. Looking at this is my other core holding, URNM. It's a uranium miners ETF. The one I'm holding is a US listing, although there's also a local listing as well. The way I played this is I bought my initial stake. It was back in December 2020. It was as prices were breaking up. This is another interesting lesson. So I bought basically at an all-time high. A lot of people say, look, I don't want to buy at an all-time high because the market's due for a fall. But all-time highs often lead to new all-time highs, and that's been the case with this. and I've held it all the way through. I've sat through this pullback. So just to explain, for me, this uranium position, it's a longer term holding. It's a longer term position. It's a strategic position, not a tactical play, not a short term, not even a medium term trend following play. I wanted to really be able to like maintain a position, provided the price action didn't deteriorate beyond an acceptable point. And for me, this was an acceptable pullback for a larger, potentially longer term move. It always remained above my entry point. I wouldn't have held it back below my entry point by any means. Then I added to my position through Bannerman and another uranium stock. This one here, NXE. I've got the local listing of that, Next Gen Energy. I added as prices were breaking up, and as I was talking about it on these videos, they look like they've had big runs. Looking at a stock like Paladin locally, an ASX listed stock, it's had a big run. Looking at Deep Yellow, again another ASX listed stock, it's had a big run. But when we just compress this price action, and let me go to a weekly chart so I can get even more action on it. It's like you can't even see the current price action based on where some of these stocks have been in the past. But let's go back a little bit, even back to 27 levels, and you see where we are now. This is a sort of situation which they have had big runs, so you could easily see situations where they consolidate for months. Oh, I can't even draw it on this because it's because of the scale. But we could see a situation where these consolidate for many months and then have another big run up. I think there's huge upside potential left in these uranium plays. It's finding the right entry point now, and I still couldn't bring myself to buy some of these stocks at the moment, given the speed of the advance. But I think there will be plenty more setups as we move forward. Well, look, let's I think we might call that a wrap for this week. Hopefully that's been interesting. Hopefully you're with me next week. You can ask me some questions so we can talk some individual stock charts. Sorry it's been a little bit longer, but I had few things I had to explain to you, and hopefully it's all part of making this more engaging for you, and hopefully getting good information which you can help manage your portfolio and just understand the possibilities that markets are going through, and so you're ready for stuff when it happens. We mightn't get every call right, but we might have strategies for the different scenarios. So hopefully it's been fun. Hopefully it's been interesting. Look forward to joining you next week. Till then, bye for now.